reflected in those quotations from 2007 to now?
Yes, I think there is a change. I worked for ICI in 2002, though I left in the middle. So as part of the Overseas Investors Chamber of Commerce, we were very instrumental in commenting when the code was first being introduced, and there was a lot of resistance. And somehow SECP managed to overcome that resistance, and I think SECP, PSX, PICG, ICAP, everybody has been part of this journey. But the boards that I've been a part of as company secretary, and now I sit on 2 boards as a director, I think people have begun to see the real value. And I think a lot of value actually comes from having very good independent directors on the board. And I see that, I think I've seen that on all the boards that I sit on, that independent directors, because they have more sort of governance knowledge, more industry knowledge than maybe some of the family members or the other directors who are newer to this whole business of being a director on a listed company, they can really direct and shape the nature of that conversation. And slowly, they do sort of teach the other directors on the board a lot. So yes, definitely there is a change in mindset, but along with the regulation, I think it is the quality of those independent directors that has made a big difference.
Great. Thank you, Nausheen. Asad, finally, I think we've spoken a lot about the justification and the rationale for the new approach. Let's go on to a bit to the practical implications of implementation, because I think the main purpose of this gathering is for the auditing community to see how the reporting structures may or may not change. How do you feel with the explanations that will come with the comply or explain approach, and what is the role of the auditors in verifying the explanations that are being provided for the sake of reporting?
I think as far as the explanation and how this new regime will be enforced, I think SECP will probably come up with some, proposed guidelines or, some kind of framework. But my personal judgment, and I must also say, the Chairman SECP is here. Earlier comments also were my personal comments. I was not speaking as a member of the policy board, so I just want to, clarify that. My personal view on this is that the Commission should actually take a back seat in this, and major focus should be to create an ecosystem on promoting corporate governance. Yes, auditors and the regulators should ensure that there is a proper disclosure. You see, when we are moving from a rule-based of binding regulations to a comply or explain, we are still saying that you have to comply because this is the best practice. But we are giving room to the companies that, well, they may have some other best practice that may be even better to move there, or there may be a practical limitation why they are not able to comply. Or, they look at it in a different angle. So there may be different situations. So the thing is, there has to be a reasonable explanation of why they are not doing and complying with the requirement of the code. So there has to be a proper explanation, and then obviously you can't actually again make a rule on this. It will, judgment will need to be exercised by the auditors, by the management, and also the regulators where they need to intervene. But as I said, the major focus should be to create demand for the corporate governance.
Thank you, Asad. I think we look forward to FAQs perhaps being issued by the regulators, because we at PICG have been receiving a number of inquiries. In particular, how will this be applicable to other entities which are regulated, for example, the banking sector under G1 prudential regulations, the public sector under PSC rules, and the insurance sector under its own code. So over time, hopefully these changes will be further clarified for the sake of the market participants. I'm going to move on to the questions from the audience, and then we'll give an opportunity to all the panelists to perhaps say their closing comments in the end. So are there any mics floating around? Can I ask? Jay, I see a hand up there, and one, Mr. Pastani, and number 3, number 4, and 5 at the back.
Assalamu alaikum. Thanks for
Jay, mic
insightful
closer to your-
presentation. My question is regarding a point that was made in Sadia's presentation regarding the lack of awareness of risk management at the boards. And, while we talk about diversity, gender diversity in particular, we don't talk about diversity of thought in general. And, there are a lot of things, strategy and blockchain, AI, digitization, that is basically, you can counter that if you have that diversity of thought at the board level. So what's the view of the panel? That's a very august panel here. So what's their view on this concept of diversity of thought, and why have we not been able to represent it in the code, even in the latest update? Thank you.
Anybody? I can start off saying that the trend is more towards cognitive diversity rather than gender or age or anything. But the assumption is that all these factor into cognitive diversity, which is a difference in the thinking, whether it's risk management or strategy, etc. But I'll let the other panelists add to that.
I could add something. I think, again, it's an awareness and training thing, that boards have to realize the value of having different skill sets represented on the board. And the more awareness raising that's done around these issues, the better constructed boards will become. State Bank, of course, requires somebody with digital expertise to be on a board now under their regulation. SCCP doesn't, but that doesn't mean that boards collectively should not be thinking about the skill sets that they require to run their businesses well.
So let me just add to that. It comes back to what Asad Saab was saying, Samad was saying. It comes back to the financial performance of the company, good outcomes, sustainability. So like you heard Samad mention as well, you have 6 independent directors. And you're bringing people in for different skill sets. So when you're talking about diversity, how do you take that best decision, right? And we all know that when you're talking about getting to a good outcome, you want diverse opinions feeding in there so that you are able to then, through a process, arrive at possibly the best outcome. So I think boards slowly are becoming, aware of that as well.
Samad?
I think all the points have been captured. Just want to highlight one thing. Getting people on board is the first part of the challenge. The second one is to make them work together to get to the right outcomes. And I can't emphasize enough the impact and the importance of running a board meeting really well. And that goes all the way from the way the agendas are set, what kind of stakeholder management you do before and outside the boardroom to prep the directors. When they come in, how do you actually have a conversation around? How do you structure the conversation? How do you make sure that the voices get heard? And then you arrive at a particular decision and make sure it's clarified and consistent so that it can be acted upon. There are many things to consider. And I think it's a part of a process, and I can promise you it's frustrating and it's hard, and a lot of times you feel like it's a waste of time. But persistence and consistency and being dogmatic about it is really important to change behaviors and create a culture around that. So it's a long-term commitment.
And it comes back to that, so I said, that same point of people knowing their roles and their responsibilities and understanding that. So what Samad pointed out, so it's the chairman's role, it's the director's role, and when you talk about your PICG director's training, I did a quick survey when asking people who would not comply or who would think of not going, most companies said, in fact, every company said that they wouldn't not consider doing this because there is value add and people understand what they are supposed to be doing much better.
I was just going to add that the responsibility of boards is always to see that they have an adequate team to take the company forward to the next level. So once they keep on reviewing the strategy, there is a definite need at a time of renewal of the board to identify what the skills gap are with the board. And I think an important element of self-evaluation that the board has to go through is the one that will bring this out. So don't do gender diversity for the sake of gender diversity, but if you're in a consumer business where the bulk of your consumers are female and there is a need to get different views from other industries and this is critical for the next 3 years for the company, then you forget about the mandatory only one. You may even have 3 or 4 females on board. So I think the boards have to be mature enough to realize what they need to do to be able to make the companies survive over long-term sustainability. And that's directly related to their changing their mindsets to be forward thinking, not just to themselves be inward-looking and compliance. So a board's time should be spent more at, not at looking at the rear-view mirror, which if you have a look at the agenda of most board meetings is annual accounts, this, etc., past minutes, but they should look at the road ahead. And once they look at the road ahead, they will identify the need for different diversity of skills. They'll identify what it will take the board to mature, and they'll be able to explain. I think that's very important because investors will be looking at them. And so the differentiation in the share price will happen between a board that is being wise and looking ahead and a board which is just compliant.
Thank you, Faisal. And I think that's why I like the PICG survey results, because it identifies the gaps in terms of where the time is not being spent on the boards, in terms of forward-looking strategy, risk management, and those issues. And hopefully these results will help drive boards to focus more on those areas which are currently facing a gap. There was a question, Mr. Akbar Pisani, do you have the mic? यहाँ पे सामने जी.
Thank you, Sadia. First of all, my compliments to the organizer, whether PICG and ICAP, for organizing this seminar, very timely, of course, continuing education for myself and a number of other people in the room. I mean, I was going back, looking at the seminar, just for introduction, I'm also sitting on a number of boards in the corporate world. My question would be, we talk of the corporate governance. I mean, as somebody mentioned, it's good to have Engros and ICI and other well-managed entities of this world in this Pakistan and multinational. But the question is, honestly, if you look back, last time listed, there are 525 companies listed on this list, maybe slightly more. How many of those companies which are local listed companies honestly and really take this corporate governance seriously and implement in a real sense? Most of it, I have known, I have seen, is box ticking, no matter what you do. Because they don't see a benefit, except barring few well-managed companies. I'm not blaming, I'm not saying anybody and everybody, barring a few well-managed companies, professionally run companies. Most of the companies which we call Setia companies are not interested. They have somebody to write the report, tick the boxes, independent directors are there, yes, female directors are there, yes, board meeting held, yes, audit committee meeting held. They don't see any benefit out of it. I mean, it's a long education process to be able, time will come, things will change. as more and more youngsters, more and more educated people come on the board, things will change. But today they see it as a compulsion from ACCP to write that report, big, thick annual reports coming out. Now come the CDs, nobody looks at it, just throw it in the dustbin. Who's interested in reading the CDs nowadays? So my question to the organizer is, what are we doing to reach out to those companies, those public listed companies like textile sector, construction side, whether it's cement, whether it's iron and steel, or whether I listed quite a few of those. You know, you talk about companies engaged in food processing and all, not, as I said, barring few. So what are we doing to reach out to those companies and those management to say that this thing is really beneficial to them, to their shareholders, to the investors, and they should see benefit out of it, not just a compulsion to mark box ticking. So.
Thank you, Ms. Prasani. Again, I can start. I'm a terrible moderator. I like to answer all the questions. But that's why I gave the little introduction about PICG in the beginning, because that's the three-pronged approach we're taking in terms of seminars and policy advocacy, creating the awareness, then doing the training, and not just listed to listed companies or those directors, but across the entire value chain, also in the NPOs, non-listed companies, SMEs, and going on to startups as well. And finally, the in-house corporate advisory to make sure what we're teaching, we're translating into practical advice on the ground. So this is the kind of ecosystem development, I think, which Asad alluded to as well, which is really going to help the different sectors. And you're absolutely right, it's the industry-specific approach that we're now bringing in. And that's very much part of our 3-year strategy, and I'm sure everybody working in the ecosystem is similarly focused on these areas that you've identified. Asad, would you like to add to that?
Well, I think you just said what I mentioned in my presentation also, that 18 years of corporate governance, we have not been able to convince the entrepreneurs that, you know, they need corporate governance is good for you. And I also said that if the regulator tells them, or even, you know, you and me telling them, they may listen to us, it will have maybe some impact, sometimes you're able to convince, but they will not be convinced unless they see the real benefit of corporate governance, unless the market rewards corporate governance, unless we have case studies that, you know, these companies who are well managed, good corporate governance, they command premium, they are more resilient, their outcomes are better. So it has to be, you know, and that is why we have to change the approach. When you tell people make things compulsory, they try to resist. So we are, you know, the reason why we have to change also, we have to now move from, you know, compulsory thing to persuasion and to, you know, create demand for corporate governance. So that unless and until, I think the people like mutual fund companies, you know, who invest, unless they actually start investing in those companies or give premium for those companies who have good corporate governance, and people see that, you know, when you invest in good corporate governance companies, you know, you make gains. So ultimately, it is the bottom line, you know, unless and until the proof of pudding is in eating it. You know, unless and until people see the evidence that good corporate governance results in better performance, good corporate governance is a good investment, you know, no amount of regulation is going to improve corporate governance or convince the textile sector and other sectors that you have to follow these rules.
Naushin?
I think it is a process of education, and I think the people who are closest to these companies, the listed companies, and who look at corporate governance in the most granular way within these companies are actually the auditors, and all of you are sitting here. And what I find, my own experience with dealing with external auditors is you also follow the box-ticking approach. You come in and you say, okay, we have to do the corporate compliance certification. Here you comply and here you don't comply. If you're saying you comply, show us evidence. There is no process of persuasion, as Asad Saab just spoke about.